Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, October 12th, 5:22 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend following O'Neill rules with the 10-6. That was last Friday, follow through day. Checking the trend gauge over here, leaders acting pretty well for the most part. There is some very clear leadership. Some of them took a bit of a hit today as we had a negative reversal in the market. We'll get to that in a minute. It's not completely unexpected, but the reason for it was somewhat unexpected. Short term, mixed bag here. We've got mid caps and small caps really got hit today, showing no interest in getting back above the 21-day moving average, rejected at the downtrending 21 yesterday. Big move down today. Dow rejected today after pausing yesterday at the 21. S&P undercut and reclaimed the 21. NASDAQ 100 firmly above the 21. So very clear mixed bag. Basically, the indexes are being led by the big seven. Those big heavy weights in the indexes are propping up the rest of uh, propping up the index. Medium term, we're on downtrend here. Only index above NASDAQ 100. It did bounce right where it should have today at the 50-day moving average. Long term, also a mixed bag. Dow rejected at the 200-day mid and small below. NASDAQ 100, S&P 500 above. So you can tell there's quite a bit of bifurcation. This is probably the busiest trend gauge I've ever put together. So what happened today? Well, it was day 5 of a rally since the follow through day last Friday. We had up days on Monday, Tuesday, Wednesday, and gap looking like we were going to gap up this morning. So that would have been the 5th day up. When you're late in consecutive days higher like that, it's a bit of a red flag. CPI came out and it was interpreted as weaker than expected. There were some let's just say that the metrics were somewhat in line, but some were weaker. And we sold off. We went from up a half of a percent to flat and then a mild bounce into the open. And the market was basically just going sideways in a tight range, which if it's the 5th day up and you're positive, that's a good sign. You're just working off going sideways and positive. You're just working off overbought, short-term or overbought conditions. But all day, we had weakness in mid caps led to the downside. Mid caps and small caps led to the downside by banks. Then at 1 o'clock, very similar to what happened on Tuesday. I wasn't aware of what the reason was for it, but today the Treasury auction at 1 o'clock was considered. Well, Rick Santelli on CNBC rates them every day, and he gave it a D minus. So apparently, there's not a lot of demand for the treasuries that were put out there. There's various metrics that are interpreted. I'm not an expert on them, but basically, seen as the demand was weak, you'll see it very clearly on the chart. The reaction after that happened, and there was a very harsh sell off over an hour long on the indexes. When you're selling off in a waterfall manner like that, you look for where should we bounce, primarily on the S&P and the Nasdaq, because that's where we focused with the weakness on mid caps and small caps. We're not as concerned about those, but we bounced where we should have on those two indexes. So call it a stay of execution, I guess, when you hold where you were supposed to. But definitely not good for mid caps and small caps, and this makes what was already a bad breadth market even worse. We'll take a look at the charts, and this will become more clear in a bit. Here are the final numbers. Big seven led strong along with semiconductors most of the day, sold off along with the market, did bounce, but still down 0.43% on the day. RG8 hit very hard, down 1.9%. S&P 500 down 0.62, was up a half percent, was down as much as almost 1.5%. So a 2% uh, swing from high to low, but did bounce where it needed to, down 0.6%. NASDAQ 100 down 0.35. Dow down a half of a percent. Mid and small hit hard. Mid caps down 1.9, Russell down 2.2, Global 60/40 down 0.74 as yields rose on that CPI and the weak bond auction, which means yields up, bond prices down, and both global bonds and global stocks basically in line, net down 0.74%, in-house GROTECTION down 0.76%. For the most part, our names that have showed themselves as leaders held pretty well, with the exception of SMCI. Haven't got stopped out on it yet, but we're close. But everything else holding up pretty well. We'll take a look at those charts as well as a few others. Let's start with the S&P 500, and let's go to the 5-minute chart so you can see very clearly here. Here was 1 o'clock. It says 105. It's the 1 to 105 bar on Monday. I wasn't aware of this at the time. I should have been, I guess. But this started from what was a strong day up to a bit of a sell-off and basing into the close on Monday. Tuesday continued the sell off, strong close, basing and chopping around, attempted breakout shortly after noon today. And then here's that 1 o'clock to 105 bar again. And you can see the sell off after that was a waterfall. This is a strong move down. So from 43.78 to 43.25, 50 over 50 S&P points, over a percent. So not quite 1.5%, about 1.2%. And then sellers exhausted, 43.25. You can see this. Let's go to a slightly longer time frame chart. I think it was most apparent on a 30-minute. You can see this 43.40-ish level over here. Back in late September, here again in late September. Here it was a pause area in early October. Then we finally broke through it. So when you break through, where are we going to back test? The low today, 43.25, matching this breakout level. So we tested the breakout and it held. That's the good. The bad is you certainly don't like to see a lack of demand for treasuries. People have been talking about the possibility of it for a while, but seeing it live on a chart like that is a little unnerving. We didn't get stopped out on anything. And then that's the strength is revealed in the pullback, and we kind of saw that today, but bounced where we needed to, and that bounce level daily on the S&P was at the ADMA. Perfect, that's what we want. And then an undercut and reclaim of the 21, which is certainly what we wanted. And this puts a pretty clear line in the sand at today's lows. We will get defensive if we pierce today's lows, on get more defensive, take some stuff off, book some gains, hedge. If we break today's lows, they bounce where we should have, and it needs to hold that level. NASDAQ 100, very similar type chart, but more healthy relative to the moving averages. It bounced right above the 50-day moving average, and firmly above the 21 and above the 8. You can see the relative strength continues. And I talked about this last week. Our asset manager is just going to absolutely pour money into these big cap tech names the way they did in January after the harsh sell-off in Q4. And then, I talked about these NASDAQ stocks just going sideways during the consolidation when we were pulling back in February and into March. And that's what we saw as well, relative strength holding up on the NASDAQ 100. It normally leads up and it normally leads down, but when the market's down and it's not leading down, that implies it's showing relative strength, and that's a very good sign. People can complain that those big 7 stocks are all that's going up. Well, maybe invest in those big 7 stocks as a result of what you're seeing, instead of complaining about this, that, and the other. But anyway, continuing to hold, continuing to be the best looking of the indexes. Let's go to the Dow Jones Industrial Average, and we got into the 200-day 3 days in a row, which is also where the 21 was, and we failed 3 times there. Undercut and reclaim the 8. Relative weakness on the NASDAQ 100, but that's not relative weakness until you want to really see relative weakness. Here's the mid caps, and then we'll show small caps. Relative strength and new low before price. That's just the exact opposite of what we look for in leadership. We love it when leadership shows relative strength, new high before price. Well, if we love that, then we got to hate the opposite by our discipline, and that's certainly a fact. Same thing here on small caps. Didn't break the low, but relatively speaking, it certainly did. And these are just a mess. Clear failure now into the 21, declining 21-day moving average, and we're getting no help from small caps. Let's go to the VIX very quickly. VIX had a pretty violent day, back above the 21 and the 200, fading in the afternoon as some strength came into the market, but we did hold that 21-day moving average. But you don't like to see the range expansion. That implies more volatility, and more volatility implies a higher VIX, and a higher VIX implies weakness in the market, or at least a bit of a headwind. So there's the VIX. Let's go to the dollar. No help here either. After immediately after the morning CPI auction yield spiked, and they didn't come off, or the dollar didn't come off while the market was rebounding in the afternoon. So strength in the dollar. Let's go to this. So the dollar now supported at the 21. Now this just looks like in an uptrend, a pullback to the 21, very similar to what happened back in mid-August when we bounced at the 21. That's what we're doing now, and we'll see what happens if we get to testing new highs. But if we do start testing those new highs, that's going to be another headwind for stocks, so we'll be watching out for that. Bonds also, same situation. Here's BND down 0.86%. Price is down. That means the yields are higher. TLT, the long bond, down 2.71%. Let's look at the yield, TYX. So the yields bounce very clearly at the 21, very similar to the dollar. We bought TBT today on this bounce off the 21, so that's going to act as a hedge. We also bought DRV as real estate faded into its declining 21. We're playing the bifurcation, shorting what's weak, going strong with what's working. So here's TYX. This is the 30-year bond up 2.81%, again with the bounce. 10-year bond TNX undercut, reclaim the 21. So again, the bounce on yields there. Bitcoin, I think I missed this yesterday, but it was weak yesterday. Breaking out of what looks like a bear flag now, breaking down out of what looks like a bear flag now. Mild weakness today. So that's the big inter-asset correlation. Let's go to the tail of the tape. You can pause this to hit everything. Stochastics went from really looking good to being mixed. RG8, they're all uptrending but reversed today. This mixed up arrow, down arrow means that the moving average is trending higher, but the price spiked lower but hasn't crossed back below the moving average. So there's two things to look at when you're looking at stochastics. NASI RSI coming off of oversold. I don't know if it'll hook back down after the readings that we get today. That doesn't update until 6 o'clock Eastern time on stock charts. Dollar also a mixed bag, and yields same situation. Big spike up by 10 points on AAII and sentiment, so it didn't take long for that bounce on the follow through day to get the bulls up from 30 to 40 from last week. We're still under the bull case very clearly. We are, as long as we stay above the 21 on the S&P and the Nasdaq. As I said, line in the sand on the S&P today with the undercut and reclaim. So the new CPI hotter than expected. Initial jobless claims were in line also, and then it was the weak Treasury auction that set off that 1 o'clock sell-off. So day count up 4. It's our first consolidation day, and it's a distribution day. Now I've been talking about distribution if it happens on the 5 days after a follow through day. If it happens on days 1, 2, and 3, it's over 90% that the rally is going to fail. Or 1 and 2 is over 90%. I think it's 70% on day 3 and 30% if it happens on day 4 or day 5. So today was FTD plus 4, and we had a distribution day. So 30%, historically speaking, since 1980, 30% of rallies fail when that happens. As always, we've got a plan either way. Day counts, S&P. Fifth day above the ADMA with the undercut and reclaim. Third day above the 21, also undercut and reclaim. Sectors, really only semiconductors were strong all day today. We bought Soxel when we saw that, opted for that instead of Nvidia because it was really led by the semi equipment companies that were strong all day today. KLAC, AMAT, and LRCX in particular. Uh, all of these sectors, more sectors negative than positive, quite obviously. So we bought Soxel. We added to VRT. That was early while everything was acting just fine. But we did see the spike up in TBT and took a position in that. And when we started selling off today, we bought DRV, which is inverse XLRE. And I did not copy this, but I need to. So here's the bottom line on the day. Yields up on CPI in the week bond auction, mid caps and small caps. Ugh. S&P and NASDAQ bounce where they needed to. Let's see what tomorrow brings. How about some charts? First of all, what we bought and sold. XLRE has been weak, quite obviously, for several reasons. One, small banks increased or regional banks holding a bunch of real estate that the variable rates, the rates going higher, with the interest rates going higher across the board. But it did have a very strong rally over the last 6 days until it ran into the declining 21-day moving average, got above it, back below it today. That makes a break above there a failure and gives us a reference point for a short by buying DRV. That's 3 times inverse real estate, and that'll be with a stop above yesterday's high in XLRE. Again, we're not looking at the chart of the derivative; we're looking at the chart of the underlying, as I mentioned last night. So that's XLRE. VRT very strong. Strength is revealed in the pullback, holding its breakout. Uh, Pulled back barely when the market was selling off harsh today. Relative strength continues to make new highs. Best looking chart in the market. That's still at a reasonable buy point. I should add to that. And then TBT. This is it goes up if interest rates go up, and the bounce off the 21 today. We bought TBT. Semiconductors. We had an alert set above the 50-day moving average and the high of the last couple of days. It broke above it early. We bought it early. We added to it some. It pulled back, held the 50-day, undercut and reclaim actually on the 50-day. Look at the relative strength on semiconductors too over the last 3 weeks. It's what you want to see. This chart looks a lot like the chart of the NASDAQ 100. And the 21-day will be our stop on this. So let's take a look at the rest of the portfolio. Anything, let's see. Okay, some things that we were looking at that didn't have good days today. DraftKings, low volume on the pullback, but down 4.16%. Not so good there. ITA gave back most of the last 2 days gains, but bounced at the 21. We own DFEN, which is a 3 times ITA to play the Mideast conflict. Let's see, what else do we want to look at? ITB, we saw some bounces recently in the home construction related stocks, but again, ran into the declining 21-day, failed, and an ugly bar today. Relative strength making a lower low, just like mid caps and small caps. Relative strength making a lower low before price. That does not look good. Let's see what else jumps out at me. I think that is those are the only non-portfolio names we're going to look at. So here's how the portfolio held up today. We looked at well, let's take a look at NRGU. This is 10 big energy stocks. Energy was mixed today, still trading in a tight range. My expectation, of course, is that this goes higher with the Mideast conflict. NRGU, DFEN, we showed that via ITA. Nutanix acting like a champ again. Small pullback after a break above that consolidation. CrowdStrike, this had been going multi 6 days straight up. Time for a pullback on that. Not just acted fine. Normal pullback on this on below average volume. Same thing with Zscaler. 4 days up. mild pullback, acting fine, no problem. SMCI, this was the weakest of what we had. I really like the setup here. Volume slightly above average, bounced at the ADMA. You can't complain if something's at the ADMA, and basically just revisiting the top of the shelf that it broke out of around this 290-ish area. So giving that a little bit more room. Uber, we're underwater slightly on this. This pulled back to the 21. I don't like that volume was higher than the up volume the last 2 days, but that's a good looking, still a good looking consolidation there within an overall flat base. And Palantir put up some strength today, closed slightly positive, consolidating nicely after a strong up move. That is everything. And with that, I'm going to wrap up the video today. Remember, it's not how much you've made in the market, it's how much of that you can keep. Things were a little dicey today during this pretty harsh sell-off, over 1% within an hour. That's a lot on the S&P 500, considering that volatility on the S&P is just about at 1%, and a big spike up in the VIX too. Whenever you see panic, it's very easy to say buy panic, sell euphoria. Okay, yes, there's a lot of emotions involved with this, but today we stuck to our stops. They didn't get hit, and so we didn't sell anything. We saw some opportunities to short, like in real estate, and uh, in interest rates, play interest rates going up. In other words, a bond short, and we took advantage of those. And with that, we're going to wrap it. Always love to hear from you. The email is don@revereasset.com. The phone is 855 Real Wealth, 855-732-5932. I've had a couple of wonderful people comment on YouTube lately that this is the only video they need to watch. It's in depth, it tells exactly what happened under the hood, and they stopped watching a lot of other things. And that is just music to our ears. When I started doing these videos many years ago, I said to myself, what would I want to know every day? And that's what we put into these videos. And we appreciate the kind words. Comment on YouTube. We address every comment that's out there. And here's our contact info. And with that, I'm gonna wrap up the video for Thursday, October 12th. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great day.